Hey everyone, welcome back to the channel. Today I'm giving you a transparent look inside my high-yield ETF portfolio. How much I've invested, what I own, the income it's producing, and how it fits into my retirement income plan. All of these ETFs are held in my taxable brokerage account, and the dividends are not being reinvested. I actually use the income each month to help cover my living expenses. Let's jump in and go through the details. I started building this high-yield ETF portfolio in June 2025, so it's still fairly new, but it's already paying strong monthly income. Let's start with the numbers. First up, JEPQ. I started purchasing it on June 9th, 2025. I currently own 449.415 shares with a cost basis of $54.13 per share for a total investment of about $24,328. JEPQ currently yields 10.57%, and since I started, it's already paid me $593.92 in dividends. The share price has appreciated about 8.16% since my first purchase. So, between dividends and growth, it's been a really solid performer. Next is GPIQ, which I began buying on June 11th, 2025. I hold 403.215 shares with a cost basis of $49.88 per share, totaling about $20,119 invested. The current yield on GPIQ is 9.64%, and so far it's paid $461.57 in dividends. It's also up about 6.89% in share price since I started, so total returns have been strong here too. Finally, there's QQQI, which I started on June 16, 2025. I own 373.352 shares with a cost basis of $53.54 per share for a total investment of $19,985. QQQI has the highest yield at 13.6%, and it's paid $575.02 in dividends since I started. This one's up about 2.44% in share price. So even with smaller growth, the high income keeps the total return attractive. Altogether, I've invested about $64,434, received $1,630 in dividends, and my overall portfolio is up between 5% and 6% in market value since June. Not bad for just a few months. Now, let's talk about what this portfolio looks like on an annualized basis. If I apply each ETF's current yield to my cost basis, JEPQ should generate about $2,572 per year, or roughly $214 a month. GPIQ should produce around $1,940 per year, or about $162 a month. And QQQI should bring in about $2,717 a year, or around $226 a month. That gives me a total estimated annual income of about $7,229, which equals roughly $602 per month in cash flow. And again, that's from about $64,000 invested, with a blended yield of around 11.2%. Each of these ETFs takes a slightly different approach to generating yield. JEPQ focuses on the NASDAQ 100 and uses covered call options to generate income from premiums, while still keeping exposure to tech stocks. GPIQ takes a similar strategy, but leans a little more toward growth, kind of a middle ground between income and appreciation. QQQI is the highest yielding of the three, using a more aggressive covered call overlay, which is how it pushes that 13% plus yield. I like this mix because it diversifies my income sources while still keeping exposure to high-quality U.S. companies. Even though all three are income-focused, they're not identical, and that balance helps smooth out returns month to month. Since starting in June, the market's been up and down, but my main focus is cash flow, not price swings. Even with those small ups and downs, the monthly dividends keep coming in, And that's really what matters most for my strategy. Overall, my portfolio is up around 5 to 6% in market value, plus the dividends I've already received. So I'm earning both income and growth, which is exactly what I hoped for from this type of portfolio. Now, high-yield ETFs aren't magic. There are definitely trade-offs. The main one is that these funds sell covered calls, which limits upside growth when markets rally hard. That's the trade-off. You get consistent income, but give up some of the big gains. Another factor is that dividend payouts fluctuate. They're not fixed like a bond coupon. So, while the yield is attractive, it's not guaranteed to stay at this exact level forever. For me, that's fine. My focus is on reliable monthly income, not chasing every bit of capital appreciation. This portfolio is built for cash flow, not growth. The dividends are not reinvested. They are paid into my taxable account and used to cover living expenses. Yes, I pay taxes on those dividends, but that's the price of liquidity and flexibility. Looking ahead, my goal is to grow this portfolio from around $64,000 today to between $150,000 and $300,000. At my current blended yield of 11.2%, that would generate roughly $16,800 per year, or about $1,400 per month, at $150,000 invested, $33,600 per year, or around $2,800 per month, at $300,000 invested. That level of income could easily cover a large portion of my living expenses. And that's the long-term goal, steady, predictable income that supports retirement. For me, this isn't just about numbers. It's about financial peace of mind and independence. I want a portfolio that pays me to stay invested, that keeps generating income whether the market's up, down, or sideways. It's consistent, automatic, and helps me focus on life instead of market timing. To sum it all up, total invested, about $64,400. Portfolio gain, around plus 5 to 6% overall. Blended yield, roughly 11.2%. Projected income, about $7,200 a year, or $600 a month. Future goal, grow to $150,000 to $300,000. Generating $1,400 to $2,800 per month in dividends. I'll keep sharing updates as this portfolio grows, as payouts change, and as I fine-tune my income strategy. If you found this breakdown helpful, make sure to like, subscribe, and leave a comment.